Good day, my name is Christel from Frans, the Klerk Independent Technical Analysts. Akbar wanted us to kick off with Telkom. Now, many of the weekly graphs and even some daily graph has got cup and handle formations on them. Now, a cup and handle formation is a positive formation with a trough and a little bit of a pullback, found support and then reached for higher levels. When that previous resistance changes into a support, that cup and handle formation is confirmed. And that is also seen as a higher low. The pullback, the support that it found here, it's a little bit higher than that previous support it found here, and that is seen as a positive formation. So if we look at Telkom, and I'm going to zoom it maybe out for our viewers, that level waiting there at 21 Rand 51 needs to change into a support in order to confirm the next higher low as well as this cup and handle formation. Now, my stochastic indicator is not really oversold in oversold territory. It is sitting on a 29. We would prefer it here below a 20, and especially when that positive divergence gets confirmed. Now, a stochastic indicator works like an elastic band. It highlights overbought and oversold levels. When the instrument is oversold, there is a lot of room for upside. The probability of the instrument to rise for higher levels is more likely. When the instrument is overbought, above an 80 or 90, it means that the probability of the instrument to decline is more likely. And especially the confirmation, the divergence, is when those two moving averages within the indicator starts to break to one another to the downside, and that is when the confirmation will be on the table. So at the moment, my stochastic indicator on Telkom is not in ideal territory. My moving averages within my indicator also looks a little bit hesitant, but my formation looks positive. So above that 21.51, Telkom would be a buy. Stop loss that you can use 18 Rand 80, and then obviously the strong resistance levels there, 25.71 and even 32.56 as possible targets to higher levels. Keep in mind that the stochastic is a laggard indicator, so the price action might move faster than the actual indicator does. And usually the formation weighs heavier than the actual indicator. You'll see there that our red line that represents the 40-week moving average is also waiting far away from Telkom, and that's also normally an indication that the price action needs to come closer to the 40-week moving average, because that 40-week moving average is the line in the sand. It tells us above this level the long-term sentiment towards the instrument will change to positive, and that is only waiting at 47 Rand 74. I would be very concerned again when Telkom starts to consolidate below 16 Rand 90, and that is the low of the week of the 16th of March 2020. Fatima wanted us to look at MTN. We saw that they reported good results, and MTN has managed to get a lot of more new subscribers. But Fatima, you'll see here also we are sitting with a cup and possible handle formation, and that positive formation will be confirmed above 52 Rand 75. When 52 Rand 75 changes into a support, the optimism around this formation will be confirmed. So you can accumulate above that level. Stop loss you can use is 42 Rand 20, and then obviously the strong resistance there at 73 Rand 16, and then 76 Rand 70 is possible targets for higher levels. And also, same story here. My stochastic is not in ideal territory. It's sitting on a 32, but the formation looks positive. And I think there's a window waiting on, there you go. There's a beautiful window waiting there on MTN, Fatima. And that is between 74 Rand 75 and 69 Rand. That's a gap on my graph that can act as a possible target for higher levels, and that you can use as possible levels. Stephen wanted us to look at Old Mutual. Now, also same story here. This cup and handle formation has been confirmed when that resistance that waited at 12 Rand 43 changed into a support. And this share already had a massive rally this week, up 10% already. My stochastic indicator has still both of the averages is pointing upwards, and we can see that the next higher low was confirmed. Old Mutual Stephen will only warn again below 12 Rand and 12 cents. Then I might be concerned about the stock. But at the moment, the momentum to the top is in place. It's a beautiful base that it has formed here. Higher lows. At the moment, the graph looks fantastic. The big question now is, will this momentum be sustained? In other words, will there be enough buyers to continue to lift this share price to higher levels? Will I enter this share now? No, not after a rally of 10% this week. I would wait maybe for a possible pullback and then accumulate this share. Otherwise, you'll have to maybe, you work on the probability that will it rise another 10% in the week to come after our market have had such a massive rally the last couple of weeks. But the graph looks positive. If you're not in it already, I would rather sit on my hands at this stage. Rian wanted us to look at the rand against the American dollar. Now remember, these are weekly graphs, and Rian, we can see that there is depending on what side of the market you want to be, an ugly or a beautiful double top formation. And that tells me one thing, that the expectation is there that we can see a stronger rand against the American dollar. And that formation, that double top, will be confirmed when 17 Rand 95 changes into a resistance. In other words, when the rand can strengthen in below 17.95, that double top will be confirmed. Obviously, that formation will become obsolete and wiped off the table when 19 Rand and 8 cents changes into a support again. So at the moment, what is the target of that double top formation? It's the length of the left or the right leg projected downwards from where that formation will be confirmed, which means the probable or possible target for that double top formation on the rand against the American dollar is 16 Rand 83. Will I be able, would I trade it as a short? Yes. It's overbought levels. Yes, my stochastic is not ideal yet. You want those two moving averages to point downwards, but it is very overbought. The US, it's very overbought. So at the moment, I think you can consider a short here on the USD ZAR pair. Use that 1908 as a possible stop loss level, and as I've said, 1683 as a possible target. And the weakness, remember, for a long-term investor, as long as that 40-week moving average is a support, and in this case it means the weakening trend of the rand can continue. So at the moment, long-term investors can still expect a weaker rand, but maybe that double top formation is just telling us that we can see a stronger rand in the near future. Chantal wanted us to look at Boeing, listed in the US on the New York Stock Exchange. I mean, again, a cup and handle formation. So many positive higher lows, a trough with a handle telling us that in the dips there are buyers around. And Chantal, that cup and handle formation or the next higher low on Boeing will be confirmed there above $154. So that will be in place to enter a possible long on Boeing. Stop loss that you can use is around 128 Rand 63. And again, the share is still nicely oversold. You would want those two moving averages. You want the positive divergence to point upwards, but the graph looks strong. Boeing will only worry me below 121 Rand and 6 cents, and then below 92 Rand 57, we might see lower lows again, and that will be a massive concern. But also take note there, that 40-week moving average. Chantal, you could not, time and time again, the share almost warned you back in the day there in August, October last year, that it is not strong enough to keep that red line, that 40-week moving average as support. And that should have been an indication there to bank your profit on Boeing and maybe look for something else. That 40-week moving average is almost the first indicator for long-term investors that they should use to try to interpret and learn technical analysis. Gavin wanted us to look at Macy's, big retailer in the US, and in this case, Gavin, there is not a cup and handle formation, but a beautiful double bottom. Now, a double bottom is visible when the share retraced, it found support, it bounced again, found resistance, retraced, found support again, and this support level is almost at the same level of the previous support. And when that instrument rises again, when that previous resistance changes into support, that's when the optimism and the formation will be confirmed. And on Macy's, Gavin, that is waiting at $6.66. Above $6.66, Macy will confirm that double bottom. Stop loss that you can use, $4.85. And again, nice oversold indicator that tells me the probability of the instrument to rise to higher levels is more likely. And yes, they've had some tough times, results not as expected, but I want you to show and just zoom this graph out, Gavin, so that you can see that this stock is trading at the same levels it did during the financial crisis in 2009. And you can clearly see what this stock has done ever since. It just rallied back then, and I mean, you know, with all the stimulus checks the US are going to get, the public, I wonder if they might not consider going and spending that $1,200 at Macy's. Russia wanted us to look at Remgro. Again, same story. We can see clearly a cup and handle formation, which tells us there is optimism. It tells us that in the pullbacks there were buyers. And that cup and handle formation will be confirmed above 138 Rand 17. When will I be concerned about the stock? Below 127 Rand 63, that will be my first warning. So you can use that as a possible stop loss, Russia. And then obviously below 120 Rand 33, I will be very concerned about Remgro, because then the next lower low will be confirmed, and that would ring a bell to be very, very careful. Please feel free to send us your requests through for next week's show. Have a fantastic week. Take care.